Paul, that sounded pretty confident. Now the bigger risk is unemployment. What's your take?
I thought it was an absolutely marvelous speech. I would call it a valedictory. We don't see those very often. You see them at turning points. And essentially, this was a valedictory of essentially Chair Powell turning the page, saying the mission, which has been focused on inflation for the last 2 years, has been successful, and that we are there, and that going forward, the mission is going to be maximizing full employment. He doesn't want to see any further weakness in the labor market, and that we're beginning an easing journey. Not an easing, but an easing journey back towards neutral. So I thought it was an absolutely marvelous graduation speech from a successful anti-inflation campaign now to a new campaign to maximize unemployment and prevent further deterioration. It was a marvelous speech.
Mike, David asked if it was anything surprising. It wasn't really surprising. We expected the pivot to come. I guess that there was a risk that he wouldn't necessarily be, as Steve said, so unhedged when it came to his confidence on inflation and the timing to adjust. But it's been priced in. I mean, the market has already moved so much when it comes to pricing in rate cuts for this year and next. So you do wonder how much longer a speech like this and a policy pivot can carry us.
Exactly. I mean, it would be really hard for Powell to have kind of outdoved the market based on how the market had gotten priced in there, right? The bond market, yields breaking down. We saw what's going on with the dollar. I think that was mostly happening a couple of days ago. People got really over their skis. So now we have it priced, and it's going to be about monitoring it. I mean, I always say this, the soft landing is not everyone's comfortable with everything. It sometimes looks like we're sliding into a downturn, and sometimes it looks like things are great and we're reaccelerating, and it nets out to being, kind of slow and steady. And, you guys were talking about the 2 years ago when he sort of said we might have some pain. Well, unemployment was at 3.6% then. We're up to 4.3. He characterized that as, unemployment didn't have to go above the norm or above what we used to think of as full employment for us to get inflation down. That's definitely a good thing. But nominal GDP, point to point from that speech 2 years ago, is up 5.5%. So obviously, it was definitely an upside surprise to how the economy was able to handle it. And now it's about, monitoring along the way. And that's all we're going to be doing, week to week.
So is there a Powell put again, Paul? He's in adjustment mode, and he's got the market and the economy's back. He doesn't want to see weakness.
I think there's a put from the standpoint that in the pace of the easing to come. My base case scenario is that we are on a journey of 25 basis point cuts probably for the next 8 meetings, a couple hundred basis points cumulative. So that's my base case. But if we see weaker growth and particularly weaker jobs, then I think we could have a bit of front loading and start the process with 50 basis point cuts. I don't think that's the base case yet, but clearly he's opened the door for front loading of the easing process, just like he had front loading of the tightening process, if we see material further deterioration in the labor market. So I think that was, if there was a positive surprise in his speech today, which was marvelous, it was the notion he drew a line in that we don't want to see further deceleration in the labor market. We're there. So I think that would be the trigger if we were to move to 50 basis point increments versus 25. But I think essentially the takeaway from this is over the next year, you're going to get a couple hundred basis points worth of easing, which is simply validating in many respects what the market has already discounted. So I'm actually giving a amen to Mike.